Welcome to the deep dive. So what we do here is pretty simple. Cut through all the noise. We take a whole stack of articles, research, our notes, and pull out the really important stuff, those nuggets of insight.
It's like your shortcut to actually being well-informed, without drowning in information.
Exactly. And today, we're diving into the crypto markets. There's some really fascinating stuff happening, developments that are kind of reshaping the digital asset landscape.
Definitely. Things are buzzing.
Yeah, so we've got three, I think, pretty surprising stories we're going to unpack. We're talking a billionaire buying huge amounts of Bitcoin, a major company revealing why they didn't do that, and a really bold prediction for Ethereum.
It's going to be good. And hopefully you'll have a few of those aha moments, because we're not just looking at what's happening.
Right.
We want to get into why it matters, the bigger picture, the context for these events that are definitely moving the markets.
Okay, so let's kick things off with Michael Saylor. He's the executive chairman of, well, they've rebranded now to just Strategy.
Yes, the crypto world's most famous Bitcoin maximalist, you could probably say.
Definitely. Someone who really believes Bitcoin is like the only game in town. And he's just dropped another, Bitcoin bomb, another $500 million acquisition.
$500 million more. Wow.
The scale is just, it's hard to wrap your head around. Strategy now controls 597,325 Bitcoin.
Almost 600,000 BTC.
Just try picturing that. It works out to about 2.8% of all the Bitcoin currently out there.
Which is huge.
And valued at, over $64 billion now, making Strategy the largest corporate holder of Bitcoin anywhere, globally.
It really underscores his long-term strategy, doesn't it? This whole Bitcoin treasury idea, he started back in 2020.
Explain that a bit more. What's the core thinking?
Well, fundamentally, Saylor sees Bitcoin as the ultimate store of value, like digital gold, but maybe even better in his view, in answer to currency debasement, inflation, all that.
So he's consistently buying, regardless of price swings sometimes?
Pretty much. His conviction is unwavering. And doing it at this scale, it's effectively turned his company, MicStrategy, now Strategy, into, almost like a publicly traded Bitcoin ETF, but a very aggressive one.
Offering a way for traditional investors to get Bitcoin exposure.
Exactly. And the timing of this latest buy, end of June 2025, that sends a message too. It signals, continued institutional confidence, even when the market's been a bit shaky.
And it's important how these purchases are funded too, right? It's not just cash lying around.
No, absolutely. They're largely funded through stock offerings. So they're essentially using the equity markets, raising money by selling stock to buy more Bitcoin.
Which is a pretty unique financial maneuver, really.
It is, and the markets definitely reacted. Bitcoin itself showed renewed strength after this news. And Strategy stock, it's had a remarkable run.
Yeah, I saw that. And analysts are saying his buying decisions are now so big they can actually materially impact Bitcoin's price.
That's a key point. He's become such a large player, his actions alone can move the needle, which, has its own implications.
Right, like what are the potential downsides of being so concentrated? Does that create risk, not just for him, but for the broader market?
That's the crucial question, isn't it? I mean, the returns have been spectacular for Strategy shareholders, but the concentration risk is real. If something changed with Saylor's view, or a Strategy faced, say, liquidity problems,
it could send shockwaves through the Bitcoin market.
Potentially, yes. But for now, his conviction seems to be a big psychological boost for the whole sector. And speaking of assets that might be poised for a big move.
Perfect pivot. Let's talk Ethereum. While Bitcoin gets a lot of the headlines,
often does,
Ethereum seems to be, maybe more quietly, setting up for what some think could be its most explosive move yet.
Yeah, there's definitely chatter building around ETH.
So our next insight gets into this bold prediction. There's a prominent crypto analyst, Ted Pillows, who's identified historical patterns suggesting Ethereum could surge, get this, to $10,000.
Wow. Okay, $10,000 for ETH, that's a big call.
It really is. So what's the actual basis for that? Is it just reading chart patterns, or is there something more fundamental going on? Is it just hype?
Well, it's not just hype, though it's definitely ambitious. The argument stems from solid technical analysis. Looking at Ethereum's daily chart, it's showing strong consolidation.
Meaning it's trading sideways in a tight range.
Exactly, which often happens before a big price move, up or down.
Yeah.
But crucially, it's holding firm above key support levels price points, where buyers tend to step in.
Okay.
And the momentum indicators, things that track the sort of speed and strength of price changes, they're holding steady, even with recent market ups and downs. And these patterns look quite similar to setups before previous major rallies for Ethereum.
And ETH has shown some resilience lately, hasn't it? I saw it had a small uptick, like 1.21% over the past week. It responded well to Bitcoin bouncing back, but it also seems to have its own strength.
That independent strength is key. And when you look at why this $10,000 target isn't completely out there, well, history shows Ethereum can make these explosive moves that kind of catch everyone by surprise.
Right, delivering those returns that seemed impossible beforehand.
Exactly. I mean, I remember watching some of those earlier bull runs thinking this can't sustain, but it did for a while. Plus, you have the fundamentals lining up too.
Like what?
Well, Ethereum's continued dominance in DeFi, decentralized finance, all those applications being built on it. Then there's growing institutional interest, maybe slower than Bitcoin, but it's there. And the technical upgrades, like moving to proof of stake, are improving its scalability and efficiency.
So it's a combination of factors, the technical chart patterns suggesting a breakout, backed by these stronger fundamentals and historical precedent.
Precisely. It's that convergence that makes the case compelling, even if the $10K number sounds very optimistic right now. It feels like something is building under the surface.
Okay, fascinating. So, from maximalist buying and potential breakouts, let's turn to our final story. And this one is a bit of a surprising revelation from one of crypto's biggest names.
Oh.
Coinbase. Coinbase Global Inc. They've actually disclosed that they considered Michael Saylor's Bitcoin hoarding strategy way back when, but decided against it.
They rejected the Saylor playbook. Interesting. Why?
Their reasoning, they apparently deemed it too risky for their business model, which is quite something given how well it's worked out for strategy, at least on paper.
That is a bombshell.
Yeah.
Especially considering the timing, Coinbase is preparing for potential inclusion in the S&P 500 index, right?
Exactly, a huge step towards mainstream legitimacy.
So this admission suggests they consciously chose a more, let's say, conservative path, steering clear of that high-risk, high-reward Bitcoin accumulation play to perhaps better position themselves for something like the S&P 500, to look more like a stable blue-chip company.
It really highlights a fascinating split in strategy, doesn't it?
Absolutely. You've got MicroStrategy's all-in Bitcoin maximalism on one side.
The big bet.
And then Coinbase on the other, focusing on building a diversified crypto services, business trading, custody for institutions, other services.
But let me push back slightly. Hasn't Saylor's approach, despite the risk and volatility, actually delivered way more shareholder value in terms of pure percentage gains than Coinbase's steadier approach?
That's a fair point, purely looking at stock appreciation during certain periods. MicroStrategy's stock performance has been directly tied to Bitcoin's, leading to explosive gains, but also sharper drops. Coinbase's value is linked more to the overall health and activity of the entire crypto market, plus their service revenue.
So different kinds of exposure.
Very different. It's really a live debate. Is the long-term value in holding the asset directly, like Saylor, or is it in building the picks and shovels, the infrastructure and services for the whole ecosystem, like Coinbase?
And Coinbase getting closer to the S&P 500 maybe suggests mainstream finance prefers the second model. Stability, regulatory credibility.
It certainly seems that way. They value the diversified revenue streams and the perhaps less direct exposure to the volatility of a single asset. And Coinbase has been successful lately. Their stock surged, what, 42% recently?
Yeah, and they were named Time Magazine's disruptor company. So their more conservative approach, at least regarding holding Bitcoin on their balance sheet, seems to be paying off in terms of achieving that mainstream financial market legitimacy.
Definitely. And this contrast, Saylor versus Coinbase, it offers really valuable lessons for any other company thinking about getting into Bitcoin or crypto. It shows there isn't just one way. There are different risk profiles, different paths to success or attempted success in this space.
It's not one size fits all.
Not at all.
So wrapping things up, these three developments we've talked about, Saylor's relentless buying, Ethereum's potential setup, and Coinbase's strategic choice. They really paint a picture of a market that's maturing and diversifying.
I think that's right. Looking at the big picture, you see Saylor representing this unwavering institutional belief in Bitcoin as a core asset. You see Ethereum with the technicals suggesting major potential ahead, driven by its ecosystem. And then Coinbase proves there are multiple ways to build a successful business in crypto, beyond just hoarding coins.
And the key takeaway for you listening is probably understanding these different approaches. As crypto evolves from, well, what many saw as just a speculative playground.
Which it partly was and maybe still is in corners.
Right, but it's evolving into a more legitimate asset class. And seeing these different institutional strategies, different risk appetites take shape is crucial for navigating what comes next.
And maybe here's a final thought to chew on. You have this convergence happening. Aggressive buying from major players, technical charts hinting at big breakouts, and established companies validating different strategic models for crypto businesses. It really suggests the market might be entering a new phase.
For a new phase of development.
Yeah, one that could drive some really significant price action across the major digital assets. And that begs the question, doesn't it? What does this new phase mean for the future? For your investment strategies, maybe, or even just how you understand the direction of global finance?
Something definitely worth thinking about. Thank you for joining us for this deep dive into the sources.